Brian Jones, Director of Education and Conferences, coming to you with the industry standard. I have with me today Lynn Turner, who will be the keynote presenter for the 2011 Annual Consultants Conference for the National Association of Certified Valuation Analysts and the Institute of Business Appraisers. The 2011 conference will be held June 8th through the 11th in San Diego, California, and Mr. Turner will be delivering the keynote presentation, The New Economy and What It Means for Small Businesses in the U.S. Thank you, Mr. Turner, for being with us.
Oh, it's a joy to be with you this morning, Brian.
So your presentation is going to focus on where we are currently in the economy and what it means for small businesses. You serve on the investment committee for a multi-million-dollar investor. Are there trends that you think valuation specialists should be paying attention to?
Brian, I do. I think, fortunately, I think 2011 will be a good year for business and a good year for small business. But going forward, I think the levels of debt in the U.S., some of our legacy issues with respect to programs like Social Security, Medicare, Medicaid, and the level of public debt coming out of the most recent Great Recession, if you will, have left the country in a situation that some have described as the new economy. And it's likely that we will have to see more austere programs coming out of our state and local governments, and that definitely will be impacting small business, the economy going forward in the long run, as well as valuations and what assets are worth.
In the last dozen years or so, the country has lived through two significant asset bubbles. What lessons can be learned from these, and what are the takeaways for valuation experts?
It's from an investor's perspective, it's been fascinating to watch the two bubbles. Of course, during those bubbles, asset values rose exponentially and well beyond what the underlying economics of the asset would ever justify. And I think it highlights the need for investors in the marketplace and those we rely upon, including valuation experts, to make sure that they avoid the situation where people get carried away with the momentum of a particular time period and actually do their homework and their fundamental analysis and make wise investment decisions based upon what those assets and their economics can really justify in terms of prices. It never does us any good when everyone starts running like a herd of buffaloes, if you will, rising these values well beyond what anything might be worth. And I think that's a cautionary tale and a lesson that valuation experts as well as investors need to pay close attention to going forward, especially in this new economy age.
Mm-hmm. Well, from your perspective as an investor in the markets, how do you see valuations and valuation work changing as a result of the subprime crisis?
Again, I think what the subprime crisis has taught us is that some of our models, quite frankly, didn't work. The models are only as good as the information that was input into those models, and that those inputs need to be based upon realistic numbers that arise from people really doing their homework. And so I think people do need to go back, re-examine the models, re-examine the way some of these valuations were done, rethink that, and then apply what we see actually coming down the road in terms of the economy and the likelihood of developments in that economy to get realistic asset valuations. And from an investor's perspective, I think over the next 20 to 30 years as a result, here in the U.S., we could see certainly lower price to earnings multiples than what we've seen during the two asset bubbles. I think we could actually see the prices that people pay in terms of multiples of revenue, earnings, and book value adjusting downward in the long run. And while we may have a year or two here, a very good year or two, and growth expectations above what some people might expect, they are nonetheless turning out to be lower, and recovery is turning out to be slower than what has typically occurred after a downturn of a major variety that we just lived through. So people need to be, while things are getting better and people may start to feel good about things, still need to be cautious and make sure that as you look at making these investments, they're based upon sound fundamentals that can really be justified.
Mm-hmm. What do you see as some of the factors influencing business and asset valuations going forward?
I do think that as we get into more austerity programs, and of course we're seeing Europe going through this, I don't think that's going to be any different for us here in the U.S. The level of government spend, the higher level of unemployment, I think that will all certainly weigh on things. But also, there's some interesting developments going on in China where the government is now shifting and has publicly announced policy of shifting from an investment posture where they've invested tremendous amounts in their infrastructure of the country to one of consumption where they're going to try to drive the consumption of their population up significantly. If they're able to do that, which a lot of people think they will do over the next 2 to 3 decades, then it puts them in a posture of consuming what they produce, and at that point in time they no longer need to do as much in the way of exports to the U.S., nor do they need to provide the U.S. then the vendor financing that they have, and that obviously could result in slower times of growth for the U.S. economy here and make it more difficult to finance our national debt. That brings on more austerity programs, and over the long term then a slowdown in growth here, which will translate into a slowdown in revenues and earnings for companies and lower multiples, of course.
Mm-hmm. As an investor, are there concerns you have with the work of valuation specialists?
I serve on an investment fund that invests tens of billions of dollars. We do rely upon valuations and having reasonable valuations done on companies that are bought and sold. We do invest in private equity. So the work of valuation experts is very important to us, and we need to know that it's reliable. I think in some of these situations that we saw coming out of the subprime crisis, it wasn't. Mm-hmm. And that does give us pause for concern. More importantly is the issue of have people adjusted and corrected those deficiencies that were in the system going forward, such that we can once again have trust and confidence in the valuations that we're receiving going forward, and do they reflect reasonable data and information rather than reflect a bunch of people running like a herd of buffaloes towards the cliff.
Well, these topics that we've discussed here briefly will all be part of your presentation in San Diego?
Yeah, they will, Brian. I hope to have a very interactive session with the audience there. We'll be covering from an investor's perspective some of this information. I think investors and valuation experts, and of course small businesses, have a lot in common. We think investment in small business in the next decade or so is a very important part of our portfolio allocation. We think it's a great opportunity for investors, in fact, to grow their portfolio, perhaps one of the best opportunities for investors to grow their portfolios going forward. So we'll be talking about that and talking about how these economics will be impacting those small businesses and how we hope the economy will turn out, and of course what that means for asset values going forward.
Thank you so much, Lynn. We look forward to greeting you in just a few months in sunny, warm San Diego. And for those of you who are listening to this presentation, we encourage you to look into more information about the conference, which will feature several presentations covering business valuation, business appraisal, forensic accounting, litigation consulting, healthcare consulting, fair value reporting, a very robust conference that will be offered in San Diego in just a few months. Anything else you'd like to add, Mr. Turner, before we conclude?
No, Brian, I just think you have an outstanding, exciting agenda that you put together for the conference, and speaking for myself, I really look forward to seeing it and listening to presentations. I think it's outstanding.
Wonderful. Thank you again so much for your time.
Thank you, and have a nice day.
You as well.